Hey everyone, welcome to another episode of the Two Idiots podcast. As usual, this is your host Ravi here. Other side is my good friend and co-host Ruben.
Hello, everyone.
Hey Ruben, how are you and how was your day?
Yeah, I'm fine. Yeah, today is not bad.
Nice to hear that. Yeah, just one more day to go for the end of the week, right? Looking
Yeah,
forward to the
time
weekend.
is going very fast.
Yeah, and I think it's Chinese New Year time, so we'll have an extended vacation soon. Looking forward to that.
Yeah,
So Ruben, did you hear Bill Ackman, the famous hedge fund manager who runs Pershing Square? He
yeah,
has taken a big position in Netflix. Did you hear about that?
yeah. I mean, you told us, right? So only through that one I came to know about it. Yeah,
Let's talk a little bit about that today, and we'll go over the reasons of why he thought it was a good a
yeah,
good
sure, sure.
a good bet to make in
Yeah,
these markets. I'm going to share my screen. Okay, we'll start with Twitter. That's where we'll start our journey. So last night, Ackman put out this tweet, and it pleasantly surprised everyone. So he says we recently purchased more than 3.1 million shares of Netflix, which
yeah,
makes us a top 20 holder. So they're one of the
yeah,
top 20 shareholders in the company.
yeah,
And he also goes on to say that he has long admired Reed Hastings, the founder and CEO, and the remarkable company that he and his team have built. And
yeah,
he also thinks that the shares are extremely underpriced, undervalued, because he says, we are delighted the market has presented this opportunity. And the good
yeah,
thing is he actually put out a two-page thesis on why he thought Netflix was a great buy at these prices.
yeah.
So
So what is the overall value of the 3.1 million shares? What's the current Netflix price?
great question. Let's check it out. I think it's in the 300s now. Okay, 382.
Oh, yeah. Just go to 1 month range. Okay, okay.
And the 52
It's
low was 351.5.
if it is like 400, so it's over 1 point. Well, it's over $1 billion. Okay.
You mean the valuation? Oh, okay, the
No, the value of his position. Yeah.
value of his position. Yeah, yeah. Yeah, and I think this is what you would call the Ackman lift. There is this phenomenon called Buffett lift or Icahn lift. Like whenever Carl Icahn or Warren Buffett, they release the information that they've taken up stake in a company, everyone goes and buys, and the share price goes up. So,
Yeah.
guess you can call this the Ackman lift at play today, 6%,
Yeah.
much, much, much higher than the Nasdaq performance today.
Yeah. I mean, like Kathy would dip, Shamant dip.
Yeah,
When those guys go buy something, people will go short it.
yeah, yeah.
The share will dip.
I mean, the way the sentiment change was amazing. In 2020, people just go and buy whatever Kathy
Yeah.
and Chamath were buying. But 2021, they went and started shorting it.
Yeah.
In fact, there is this new ETF as well. I was telling you about this. So basically, this is a quick and easy way to short ARKK. So this is called SARK, and the S
Yeah.
stands for short. So it's basically short ARK.
Yeah.
Yeah, and if you look at the 1 month performance, that is just crazy, right? 36% in the last month.
Yeah.
Whereas the ARK K fund dropped around 36 to 40% in the same time frame. Anyway, I digressed a little bit. So I was saying, it's a nice thing that he put out this two-page thesis. So let's walk through this thesis, and we'll see why Ackman decided to buy into the company when the share prices are at such lows. Okay, so we'll start here. Uh, so he says the opportunity to acquire Netflix at an attractive valuation emerged when investors reacted negatively to the recent quarter's subscriber growth. Yeah, so I think last week they came out with less than expected subscriber growth numbers, and that's when the stock got killed by the market. And also, there was some negative short-term guidance from the management team. And as a result, the stock price declined. And the decline was actually worsened, further exacerbated by recent market volatility. So that presented an opportunity to Ackman and Pershing Square. So I'll just jump to this part where he gets to the meat of the thesis. So he says, he has these, Netflix has these highly favorable characteristics. It's subscription based, highly recurring revenues, enormous future growth potential. I'm not so sure about that. They're facing a lot of competition from other platforms, right, Ruben, like Prime and HBO.
Yeah, I mean, what people say, I'm not so good at understanding how the Netflix software architecture works, but people more senior to me used to tell me that Netflix architecture is a pure state of the art. Recently when Disney, HBO Max, and all these guys started their streaming service, when the subscriber base grew, they faced this crash issue. The streaming is not happening properly and all those different issues. But Netflix managed to do that one quite smoothly. Even if you take the recent Squid Game, it's the most popular, most highly streamed content.
Yes.
Then Netflix managed to stream it without any issues, from the customer perspective. So they have the really good technology to like take the content to the market, because among all these online pages that are available, you have millions of websites. The video streaming is the most challenging part.
Yes.
High quality video streaming is, it takes a lot of data. So these guys seems to have managed it quite well. Yeah,
that's a great point. And I think it's because they had an early mover advantage, right? So they were able to play around with the technology and come up with the best, combination of edge computing and figuring out where to store the content locally. And that's how, I think they cracked it. In fact, the one of these South Korean broadband companies, they have decided to sue Netflix last year because
the data consumption.
Yeah, because so many people were streaming Squid Game that it crashed the broadband infrastructure for that company. Yeah. But my point is, Ackman seems to think that the subscription revenues and subscribers are continuously growing, and they have enormous future growth potential. But my argument is, sure, but there is still a lot of competition from other platforms. It's not like they have a monopoly on the streaming market, right?
Yeah, I mean, if you look at it from the content creation perspective, what I think is these big studios like Warner Brothers, Disney, what these guys have was only money, and then they get right people to do the job.
Yes.
Even these guys also have money. Now the question is all about how do we put the money in good use. So you have to get right director and right team to like build good content.
Correct.
So it is not so that okay, so they have licensing over the existing characters, movie characters, storylines, and all those things. But looking further forward into future, it's still up for debate. So if you have a good team, you will make a good content. So yeah.
I mean, it just goes back to the teachings of the great Warren Buffett. So he says, sometimes it will so happen that the future of a business or industry will be too hard to predict. So then you should just move on to other stocks. It's not a good investment. Anyway, Bill Ackman thinks he has an edge and he knows more than other people. So I respect that. Okay, second point. Ackman thinks Netflix has a truly best-in-class management team and a unique high-performance culture. And he cites the example of Netflix's strategy pivot from DVD rental by mail to video streaming to becoming one of the greatest producers of content. I can agree with that. They have been quite flexible, and initially they just wanted to compete with Blockbuster by providing DVD rentals at low cost and zero late fees. And then they decided to move on to video streaming. So they scrapped the old business model and they came up with a new one. And I think finally, when Disney decided to pull all their licensed content from Netflix, I think it was in 2019 or 2020. The year is fuzzy to me. So that kind of hit Netflix hard, and then they realized that they have to start producing more of their own content. They had to create like a Netflix universe of characters. Yeah. So I agree with this. They have done good strategic changes, and they've been flexible. Do you agree with that?
Yeah.
Okay, great. Okay, third point: economies of scale and superb quality in industry-leading content, which should continue to drive future growth and widen the company's powerful competitive moat. I don't fully agree with this sentence. I mean, I agree with the first part, economies of scale. So they are adding more and more subscribers every quarter. And let's say it costs like $50 million to produce a show. Now they can spread that cost over like 200 to 300 million subscribers. So they definitely have economies of scale. But I'm a little bit unconvinced on the superb quality in content part. So this is my perspective. Of late, I just find that there is too much content on Netflix. Like, especially the original Netflix shows, which they themselves commission and shoot, right? They just make 1 or 2 seasons of shows and they just forget about it and they just move on to another new show. So the reason I pay for Netflix is because I want to find good shows and I want to binge watch it completely, right? But if you just make 1 or 2 seasons or 3 seasons and it just continue that after like 4 or 5 years, I've already lost interest. So that's always been my experience with Netflix when it comes to content. What about you? Do you have any take on this?
I mean, I sort of agree. I mean, if you want to keep people coming back to your channel over and over again, you have to keep producing the content people like, definitely. So yeah, I mean, they should have certain shows. But even if you take Western countries in general, they will make like series by series and then they will just leave it, right? Only in India, I'm not sure about other Asian countries, but only in India, they'll just keep making, one certain series for 1,000 episodes, 2,000 episodes. They'll just keep making content.
That's not what I mean, Ruben. Like, take what we had before Netflix became popular. Like, take CBS, for example. They have these amazing hit shows like The Big Bang Theory or How I Met Your Mother, right? So CBS's strategy would be this basically. So let's say a producer comes to CBS with a script saying, hey, we have this idea for the show. What do you guys think? Can you fund it and can we run it on CBS? So the CBS team would take a look at it, and if they like the concept, they would just commission a pilot, like 4 or 5 episodes for a test run, and then they would basically fund the shooting of the first 3 or 4 episodes, and they would run it on CBS channel, and then they would see how is the audience reacting to it. Is it a positive reaction or a negative reaction? If it is mostly a positive reaction from the audience members, they will decide, okay, we tested this on one subsection, and we can extrapolate the results to the full population in North America. So let us make 1 or 2 seasons.
I mean, even if you take other streaming platform like Disney Plus, Amazon Prime, those guys don't have the series that just keeps going.
Okay.
I mean, I'm not sure. Personally, it's at the end of the day, it's personal choice, right? I don't like the series because you have to wait long time to get the result. So I prefer to watch movies. So I mean, this is my personal opinion.
Okay.
So for that, even for me personally, movies on Netflix are like a bit boring. If they bring movies from the outside, so it's cool. But if they make their own movies, I'm not like so much into it.
Okay.
But I mean, it's okay. But the thing that Ackman mentions as a future potential is, if you look into what's happening with Disney, so these guys are selling characters outside of the movies,
Merchandise,
Marvel
parks.
characters,
Yeah.
shirts and all those apparels and all those things, which is
Yes.
by itself a multi-million-dollar companies, which is something that these guys are not even exploring.
Yeah.
So the Stranger Things, all these native Netflix shows are quite popular among
Mindhunter, Squid
yeah,
Game.
yeah, yeah,
Yeah.
yeah.
That's a good point.
So yeah, so but they're not like selling merchandise or any of those things, but definitely they will venture into those things and then it will make money for them. So apart from that, they are into gaming.
Correct. They just
So
started gaming. Yeah.
yes, gaming. So we should have to wait and see how it goes. So all these things that we are getting for the small budget that we are paying, which is a cost of a movie ticket for two people basically, if we take in Singapore. So
And actually, it's interesting that you brought out the gaming part. How do I access games? Any idea?
I think it's accessible only from
Your cell phone, is it?
yeah. I'm
Yeah,
not sure.
I've seen a button on my phone. Anyways, yeah. So the point I wanted to make is, even if you look at those games, right? It's all like very mainstream games. Like I was expecting more of games related to some popular Netflix shows like Stranger Things or
You see,
Mindhunter.
you just brought it. That's the opportunity.
Yeah,
What I'm saying is, these guys just had an idea, so why don't test it out? That like
yeah.
what you said earlier.
Instead,
Yeah.
instead, what kind of games they have? They have games like snooker and billiards and snowballing.
The Stranger Thing gaming itself is a good idea, great idea. I'm sure that, I mean, it's something that people who think that how can we build this further
Hmm.
will think of it. So these guys may already have an idea, but probably in the process of execution or something. But
Probably, yeah, yeah,
not yeah. But the thing that you brought up is Stranger Things gaming, Squid Game. All these are like great ideas, and
yeah.
then people would love to watch, and
Correct.
then we wouldn't be surprised if they start with streaming service. So
Hmm.
they start the games for their own movie characters, movie storylines, and then they stream the content to
Yeah, yeah,
Twitch, right? Something like Twitch.
correct.
So these three by itself is a huge opportunity. I mean, video streaming, gaming,
Merchandising, yeah,
streaming the game, and then merchandise. So that is what I think he means by huge opportunity. To buy Netflix. I mean, but looking at what's happening in these lines in other industries, so Netflix has a good potential, I would say.
okay, yeah.
But
I
yeah,
I really agree with the merchandise part. It's very easy to get into the merchandise business, right? Because they have a strong stable of characters and shows. I'm
yes, yes.
quite surprised they haven't explored that already.
Yeah,
Anyways,
yeah. I mean, yes, you just netflix.com/shop, and then all the merchandise comes out. That's the thing.
exactly. Yeah, it's very simple, right? Yeah.
Yeah,
Anyways, okay. The third point. Pricing power derived from the enormous values it delivers to customers compared with other alternatives. I partially agree with this. I do think they have some sort of pricing power, but if they increase the prices too much for me, I will just happily cancel my subscription and move on
yeah,
to
yeah. And
Prime.
even I won't do that one. Yeah,
Yeah,
you just can't pay $100 for this one a month. Even $50 too much.
exactly. I mean, if they raise the prices by $2 or $3, and I still like the shows, then I don't mind. But for me to begin with, I'm not happy with their content strategy. They just seem to be making 1 or 2 seasons, and then just they just don't give a damn about those shows. They just go and make something new. So yeah, for me, pricing power, it's just not there. I mean, or it's only there to a certain extent. Okay, margin expansion is the opportunity for continued improvement due to economies of scale in companies rapidly growing global subscriber base. Yeah, I agree with this. I think I already touched on this. If they make a show, the fixed cost is it's just 50 million, for example. But when they keep adding more and more subscribers, they can charge. I mean, they can get more money from these marginally more subscribers, and they can spread the cost of the new series over these subscribers,
Yeah.
right? Okay. This, I think, is a very important point, especially from a stock analysis point of view. Improving free cash flow profile, we should allow for continued investments in growth as well as the return of cash to shareholders. So, Roman, let me just quickly jump to their cash flows of the past few years. This is basically Morningstar, nothing fancy here. And what I'm showing you is the annual cash flows. So, if you look at this row, the last row here, free cash flow. So you'll see in 2019 it was negative 2.9. 2019 it worsened further. 2020 it improved, but I think that was because in 2020 due to the pandemic and stay at home they added a lot of subscribers, and the last 12 months it has worsened, but it is still positive. So in general, if you look at the trend on this graph, the 3-year trend, it is still improving, and I think as they add more and more subscribers, the cash flow profile will definitely keep improving, because as we discussed, the fixed cost is the same, it doesn't change. But there's more and more money just coming in from new subscribers. So eventually it'll show up in the cash flows.
I mean, yeah, I mean, these guys have to give us a visibility on from where these subscribers are coming from, right? So, I mean, US market is pretty much mature.
Okay.
European also like pretty much mature must have been.
Okay.
I mean, they were crying that it's too hard to crack the Indian market. So they have a hard time getting into Indian market. So they are facing some challenges. It's, you know, China market, we just have to forget about it.
Yeah, it's close.
They may not have a lot of regional content for the Southeast Asian market, which speaks different languages.
Yes.
So yeah, African and South American, I'm not sure. So they should have more regional content. I mean, they should go region by region, right? So if you take Amazon Prime, I can see a lot of new Indian movies coming up on Amazon Prime.
Exactly.
Compared to Netflix.
Netflix, yeah.
I'm paying only $2-3 for Amazon Prime. So people, you know, Amazon has this firepower. They can burn through cash to get their customers.
Absolutely.
But I mean, the thing that works is, you know, you provide cheaper price and then, you know, bring in all the latest movies, which is not happening on Netflix.
Yeah.
Yeah. So yeah, I mean, this is something that those guys gotta figure it out. I'm not sure how to.
Those
And
are
then
great
the
points.
kids. So do they have anything like you know, to attract kids?
Yeah. Let me show you. They have a separate kids section actually. That's one good thing about Netflix. See, right here, if you click on children, it goes to kids mode. So it's full of these cartoons and
Okay.
yeah, teenage shows for teenagers and all that, and some nice kids movies. Yeah, this is pretty cool. I think kids will definitely enjoy this.
Yeah.
And they have all these popular cartoons: Iron Man, Transformers,
Yeah.
Sonic, and all that.
Yeah. So yeah, we can just go look into this one. So improving cash flow should allow for continued investment and growth as well as okay.
Yeah.
So return cash to the shareholders. So that's the thing.
Yeah.
Okay. So we can analyze Netflix connection with the investment Universal Music Group. So we are prepared when the stock declined sharply last Friday. So now with both UMG and Netflix are all into streaming, we love the business model, the industry context and management team. Okay.
Yeah,
so
what is
just
basically
pricing
saying is when they started analyzing. So I don't know if you remember, Ackman has this SPAC, right? PSTH, Pershing Square Tontine Holdings. So initially they were looking to acquire a part of Universal Music Group, which is
$40 billion.
which is basically UMG here, the $40 billion acquisition. But the regulators did not give them the green signal, so they had to like abandon the plans to merge with PSTH.
Yeah.
But eventually, what they did was Ackman went and bought a stake of UMG for his own hedge fund, Pershing Square Holdings. You know, not the SPAC, but the hedge fund, which is listed in London. Yeah. And he says that, analyzing UMG gave him very strong insights into how the streaming business works. What are the moats and positives and negatives of the streaming business? And they use that knowledge to analyze Netflix as well. But Ruben, like, one thing I want to point out is Bill Ackman, he actually did an interview last year in July with CNBC. Basically, he talks about the UMG deal, and he makes an interesting comment about Netflix. I'll post a link to this video in the comment section of a video. Sorry, in the description of our video. So, at roughly the 14 minutes mark, he says that Netflix is amazing, but they have to spend billions and billions of dollars just to keep making new content. I don't know if you caught that. So he basically says Netflix, let's say they make a show with 5 seasons, right? The moment a user completes watching it, it's over for them. They probably might not come back and watch it again unless it's an exceptionally great show like Breaking Bad or Sherlock. Whereas with music, if someone creates a hit song, people listen to it many times, and not only that, you can also get licensing revenue if you put it on YouTube, or if it is used in some movie or a TV show. The artists and UMG will get licensing money. So that does not exist with Netflix. So I'm actually surprised he feels this way. He felt this way last year, but he still went and bought Netflix. But I think eventually the valuation just made sense for him. Because Ackman, again, Ackman is someone who is heavily inspired by Warren Buffett. And he always has this view that any investment can be a good investment at the right price. So it's obvious that at this price, $389 or whatever, he thinks that there is enough margin of safety to account for all these risks. And that's the bulk of the thesis. He just talks about where they raised money to buy Netflix. He had some market hedges against rising interest rates and inflation. So they sold a portion of their hedges to raise money, and they basically deployed that money into Netflix stock. And and finally, he just says this sentence, which I think is very important, not just for Netflix. It's important for all investors, especially in this market environment with high volatility. We are pleased to add Netflix to our portfolio. Many of our best investments have emerged when other investors whose time horizons are short term, especially Wall Street, discard great companies at prices that look extraordinarily attractive when one has a long-term horizon. I think this is a beautiful point. It urges investors to not think about 1 quarter or 2 quarters. And like when you buy a stock, buying a part of a business, right? So you have to give enough time for the thesis to play out. And just having a waiting period of more than few quarters, you already have an edge over most 90% of investors in the market. That's all I have to share for today. Ruben, any closing points you want to make?
I mean, so I mean, from my perspective, for a company like Netflix, so if you take Disney, so they have already billions of dollars worth of content, in their backlog, basically. That already made them shitload of money. So competing against Disney is just too hard for Netflix in the short run. In the long run, basically in the movie industry, whoever makes best movie wins. So currently Disney has an edge. So it's anybody's game. So I won't say put it on Netflix. But what these guys can do is explore avenues like merchandise, gaming. So we will see, or they can put themselves more as a tech company rather than not just a movie making business, or the movie making company.
Those are two excellent points.
Them as a tech company where they stream videos, money from that one. games, money from that one, merchandise, money from that one. Merchandise, you can't make a lot of money, but you can still have something. Yeah, so those things will take them to a decent level. So what Ackman was saying was, once you have a decent cash flow, which is really hard to achieve, considering the amount of money that these guys have to invest to make quality contents. So yeah, so yeah, I mean, in future, so these kind of things will come in, right? So if you make movie for Netflix, Disney don't want to work with you. So at the end of the day, it's up to artists to make a decision. Do they want to work with Netflix or Disney? So all these kind of things will come up. So yeah,
So,
I mean, it's just who plays it well. Yeah.
At what price does Netflix become a buy for you? I'm just curious.
No, Netflix is never a buy for me. Yeah, I don't want to buy Netflix.
Yeah, I have the same sentiment towards Netflix. I just feel that predicting the future with any amount of accuracy is way too hard, and you don't know in 10 years who will win the streaming wars.
I mean, there is nothing so special about streaming. The existing giants, as always, will be Disney Plus.
Yeah.
So Disney, yeah. So you can see, right? They have this Disney World concept. So they could have a Netflix world where they have, you have lots and lots of opportunities.
Yes.
But yeah, I mean, it's just too long. So I just don't want to predict. So just go with Disney. Yeah, even Disney is reasonably priced. Yeah.
Yeah, I actually.
And then whatever Netflix does, Disney is going to copy. Whatever Disney is doing, Netflix is going to copy. So
yeah, I actually hold some Disney. I agree with you. Even for me, Netflix will never be a buy. Even if it drops 50% from here, there are more attractive stocks in the market. I actually hold a bit of Disney because I think that they have more channels for cash flow, right? Like it's not just streaming; it's the traditional, the amusement parks, merchandise, and they also have ESPN. Sports is a big category, right, in the world.
Yeah, Spider-Man made $1 billion.
Yeah, exactly.
Yeah. After that, they already made 3-4 times the money. After that, they just put it on streaming and then just make money. It's just a side business.
Yeah.
Okay, just put it on streaming. But for Netflix, that's not the case.
A core business, right? It's make or die, do or die for them.
Yeah, it's just it's just too hard. It's obvious, right?
Yeah. I mean, we can think of it this way: like you have all these brands, Louis Vuitton and all that. For them, it's just like putting their products on e-commerce. Even if it fails, they don't lose anything. But if it's another source of cash flow, so that is what Disney is doing basically, right? Yeah. Streaming is just another source of cash flow. It does not need to succeed for the company itself to be successful. Whereas for Netflix, like you point out, it is the core business. It is make or break for them.
Yeah.
Well, all right, guys. I hope you had fun. I really enjoyed discussing Ackman's thesis with Ruben. That's it for tonight. Please leave your topic suggestions and like, share, and subscribe. Take care, everyone. Bye. Signing off. Ravi and Ruben. Bye.